Hey guys, I'm John Fryer. Welcome to Fryer Funds, welcome to my kitchen, and welcome to the Fryer Feast series. In this series, we took $15,000, we're investing it into individual companies, with all investment decisions made over the weekend to be executed on Monday. This is for people who work 9 to 5, who don't have time to trade during the week or make decisions during the week, so we focus on the weekend execution and go from there. Now, I want to point out, this is not financial advice, this is not legal advice, consult your own advisors, and make your own decisions. But with that said, let's dive in, see what happened this week, and where we're going from here. This was a crazy opening week for earnings sessions, but before we get into that, states are considering reopening. So I know here in Utah, they've limited some opening. Other states are really considering it. Others not so much yet because they're still, kind of in a bad spot. But since states are opening, that's going to start changing things up as well. And then Gilead got emergency approval by the FDA for remdesivir this week. So that's also going to change things up. So we've really got to keep an eye on what's happening there. But as for the stock news, the first big thing that happened this week, unfortunately, was the USO reverse split. And what that means is for every 8 stocks, it turned it into 1, and we bought 29 shares last week. Well, with that, of course, there's a little bit of a dip now, so we're down 10% from our cost basis. It turned our 29 shares into 3 shares. So I'm not quite sure what else is going to happen here yet. I don't want to sell. I want to wait for more news. But I also don't want to buy anymore, even though they're significantly down, because, again, we're waiting for more news. Unfortunately, USO is also not necessarily just trading the futures contracts. It's now changed it up to be more of a supply-demand on the ETF, which will also shake things up a bit. So we got in a bad time, I think, but I'm just going to let it sit there, because I imagine it'll spike back up at some point with any good news on it, and then we can reevaluate at that point. For social media reporting this week, Google kind of applies in terms of advertising, I guess I should say. And then there's Facebook. Both of them reported, did really well. Twitter, on the other hand, didn't do particularly well. They did with the user growth, but not with the financials. So Twitter dropped, but Facebook and Alphabet did do really well. So I would like to get into Google if it wasn't such a large percentage of our portfolio. So if it does come down again significantly, we may end up buying that, even though it'll take 7 to 8% of our portfolio there. Microsoft then reported, and they had a really solid quarter. They started to go up, but then the market started to sell off, so they did end up pulling back some. So we'll look for a good entry point to lower our cost basis and increase its percentage base of our portfolio. But I did listen in, and they did talk about gaming, and gaming is up significantly, as we kind of pictured, with Verizon even saying that on their network they're seeing a lot more gaming activity. So this next week, you've got Activision, Electronic Arts, and Zynga all reporting. So we'll look for good numbers on them. We own Activision and Zynga. We don't own EA because I think they're a little overbought, and they're not as good of a company generally. But it wouldn't surprise me if they also report good and shoot up some. Next is Amazon, and the unique situation there. They did run up significantly before earnings, so it doesn't surprise me that there was a pullback afterward because they didn't completely blow it out of the water. And then they're spending all their would-be profits as kind of normal, so with that also contributes as always. But this time, when they're spending their profits, they're not spending it necessarily on future growth. They're spending it on handling the pandemic and all their current increase in demand. So as this drops back, it could be a good buy. I think it's too big of a percentage base on this portfolio. But for my other investments, I am looking at buying Amazon again. I already own it, but I'll be looking to buy more Amazon as it pulls back because it is a really good future growth. But yes, they're spending all their profits as normal, so not too surprised about that. And then finally for earnings this week, the one I want to tip on here was UPS. UPS also sunk afterward because their financials lacked, because their spending had to ramp up so much that their bottom line wasn't particularly good. So I'm looking for a new entry point to lower our cost basis on UPS, because long term, I think that online shopping is going to grow significantly. UPS will do really well. Amazon did kind of shut down their shipping and just use UPS and FedEx for now. So UPS, I do want to get a little bit more in as it drops down and get a better cost basis on that. But of course, they were spending so much trying to ramp up that their bottom line number didn't hit as well as they hoped. So those were the earnings that I really wanted to mention this week. This next week we have a lot of earnings coming up. We'll see how things go and go from there. But as for investment actions to take this week, now again, this is not financial advice, this is not legal advice. Consult your own advisors and make your own decisions. But with that, this is what I'm doing this week. So SAH, one of our automotive plays or investments, they went up 32% from when we bought them 2 weeks ago. That's a big jump, and they could pull back. And I'd like to capture some of these profits because it's above 25%. So I'm going to sell 1 share and leave the remaining 4. And then Snapchat also grew with their earnings last week, and then this week Facebook and Twitter and Google all reporting. Snapchat piggybacked off that and went up even more before a little bit of a sell-off. So I'll sell 1 Snapchat to gain a little bit of the profit and leave the 10 shares remaining there. And then Bed Bath & Beyond, we started buying that last week. We got half in of where we wanted. It did go down this week, so we can lower our cost basis here. We're going to buy 5 more shares. And then AMD, they reported along with Intel last week, and their numbers were kind of mixed. They did well in terms of expectations, but didn't blow it out of the water. They did run up a little bit beforehand, so the stock has dropped. So we're going to go ahead and buy 2 more shares, increasing our portfolio percentage, lowering our cost basis. It wouldn't surprise me if they pull back a little further, so I still want to leave some room to buy more. So we're just going to buy 2 shares for now. But that's everything for this week and this weekend. And again, not financial advice, but if you'd like to follow along, use the percentages. I will link this sheet or this document along with the sheet down in the description. Check that out. Use the link for Webull and sign up for that and get your 2 free stocks. Robinhood if you want to do that, so you can put these in without having to actually execute on Monday, because again, Webull doesn't allow that. Or use any brokerage you want to. Tastyworks, I know, is offering 100 free stocks right now if you want to go sign up for Tastyworks and go from there. But that's all I've got for you this week. So thanks again. We'll talk to you next time.